Yo, boys, in today's video, I'm about to be talking about trading so far in December 2024. And it's only December 9th, but I decided to make this video to like sort of run down what I've been doing so far since I haven't posted since the end of November. But yeah, so as you can see here on my trading journal, this is on Notion, by the way. If you want to get it, it's a good trading journal and it's free unless you upgrade the plan. But yeah, I got the free one right now. And so as you can see, I took three trades from the 1st to the 9th of December. And it's still the 9th right now, as you can see the time. It's actually almost going to be the start of Asia session, but I'm not going to really trade it since I already got like a 3% win today. So yeah, but I'm going to be breaking down these trades and then showing you proof of executions on the broker so you guys can see it's legit. But yeah, I'm about to be going through everything, so maybe you guys can get help with your own trading. So first, we have this set up here. I'm actually gonna go low key. I'm gonna go on the folder because I feel like the resolution is better on the pictures. All right, so December 3rd, this is what I saw. So as you can see, 9:30 open, and price moves up all the way to this liquidity level. And then I'm obviously looking to see if we could get a short here. And we can see a break of structure below this low. That's why I marked out this purple line here. That's the break of structure. And then a retrace into this fair value gap that I also marked out. But the stop was also keeping in mind this order block here that price might retrace to, as well as the top of the breaker. So that's where I put my stop loss here at the top of the breaker and including this order block and the fair value gap. And I enter when it enters into the fair value gap right here. So as you can see, 56, it's actually micro contracts. As you can see, micro 56 entered short here. We get a little bit of consolidation and then straight down into the equilibrium and taking out the first low below equilibrium. So that's obviously what I targeted. So what I do basically is get the Fibonacci and only keep the 50% level and mark it from the bottom to the top. Then you could see the range when it's in a premium and when it's in a discount. So as soon as price goes into a discount, it'll look for a level to bounce off of. Of course, price could go all the way down here, right? And if it did that, okay, well, there was more profits to be taken. But also, if you put it all the way here, it's more risky because price might reverse and go back up because it's at a discount. So if the day, that's why, because I don't have daily bias. So if the day is going to be bullish, it would go down and hit my take profit and then go up. And if it's bearish, it would just keep going down. So either way, it's a win for me, and I don't have to do I don't have to mess up my daily bias or nothing like that. But yeah, that's basically the trade. So you can see the first low below equilibrium here is this low, and it got taken out. It actually re-entered into this, reclaimed this fair value gap. Sorry, and I guess entered into this some sort of order block or whatever. But mainly, it took out this low. So that's the trade. It was pretty clean. It only took like I think 15 minutes or something. You guys are going to see in the broker statements coming after I recap all these trades. So second trade here, this was an L, right? As you can see, what happened is kind of similar idea. Price is kind of consolidating a little bit. Around 10, it shoots up to take liquidity out. So then I'm going to be looking obviously for a sell. And as we can see, it's a bit of a worse trade, I guess. But now looking in hindsight, but I still would have taken it. That's why like I'm showing this like full transparency. You're going to lose some trades. And as you can see, I'm still up 5% on the month, even with losing one trade, which is obviously a lot in like 9 days and only 3 days traded. But anyways, we break below sort of two breakers, sort of an order block, But I consider this as like a break of structure, of course, and we leave a large fair value gap. So a retrace into consequent encroachment and obviously the bottom of this breaker. So then I enter short, targeting these lows because it's the only significant low. So it's basically the whole move. It's going to go down. If it's going to go down, it's going to reach this liquidity. There's nothing else to reach here, right? No fair value gaps that are significant, and obviously no liquidities, pools of liquidity. Sorry, but yeah. So enters here, and then price just goes directly to my stop loss. It didn't really have any resistance here, but that's how you enter. That's how I enter, and sometimes it wins, sometimes it loses, but the wins are bigger than the losses and more frequent than the losses. Anyways, last trade, which is today, December 9th. And again, like all my trades are basically similar. So as you can see, liquidity sweep. We're in the macro here, mind you, 9:50 to 10:10 or 10:15, wherever you want to. Like some people say, it's 15 minutes before and after, or 10 minutes before and after each hour. But regardless, we enter around 10 because of this liquidity sweep, and we get somewhat of a break of structure, but no fair value gap. So we keep waiting. It goes lower, and then the fair value gap opens. So market structure shift and a break of structure. in the macro. So this is a lot of confluences, and then it enters into the constant encroachment of the fair value gap and the bottom of this order block here. So enter in here. I'm gonna show you guys why I put my stop here in a minute, but as you can see, it breaks down slowly. Not the obviously the cleanest, but it doesn't really matter at this point. Well, I guess also partially because there's no news, so it's gonna be less speed. But it took also like 20 something minutes, and then it goes to my low, and it goes actually even lower. But that's my take profit. So like people could say, oh, I wish my take profit was lower, but bro, not every time you're gonna predict the exact bottom, even though my name is Sniper and I like usually predict the fucking bottoms or some shit. But not really predict the bottoms, just like I know where price is likely to bounce off of, and this was a level that price could have bounced off of. So I'm happy that I took this, and it's a 3.14%, which is obviously a huge trade. And yeah, so I'm obviously very happy with it, and I executed basically perfectly. So yeah, back to why I put my stop here. So when there's no really breaker to go off of, where I would like to put my stop, if it's basically just a fair value gap that I have to work with and no order blocks or breakers, I like to put it in the midpoint between the open or closed, depending. Oh wait, yeah, open or closed. Closed if it's a bullish. So basically, the start of the second candle, which is right here, and the top, not the start, the top of the first candle, and then you get a range. So I like to put it at consequent encroachment of that range because I think it's the best of both worlds. So if it's too low here, you might get wicked out because price might be extra wicky that day and shit like that, so then you might get wicked out and then it'll go to your TP, which is obviously horrible. And if you put it at the top, then it's like just you're gonna get a worse risk to reward. This, instead of a 3.14, it'll be like a 2.4, 2.5, which is also good. But if your trade would have been at 2.4 or 2.5 with this type of setup, then it would have become like a 1.8 or something like that. So overall, it's just, I think this is the best of both worlds. Of course, if there's a breaker or something you want to, or order block, you want to put it over that just to be extra safe. But in this case, the midpoint is like a perfect place, and it's a good tool to have. Just like if you're going to put your stop losses and you just like use like basically the judgment of how the market is like working and stuff, this is a good tool to have just in case you need to pull it out like in this situation. And it's basically a perfect stop. Right here, you have enough breathing room, and you're not obviously too scared going into this trade. You know what I mean? Because there's obviously like if you had it right here, you would be like more worried because it's like super close, and it's just not realistic at this point. But yeah, if you had it all the way up here, you would just get less of a reward, right? A reward. My bad. Why am I talking like that? But yeah, so that's basically the three trades. I'm about to go into the broker statements real quick, just so you guys could see that it's legit. And yeah, so as you can see, custom range from December 1st to December 9th, gross P&L 7.464 thousand. Number of trades, it says 11, but that's just like you'll see later on. I'll just show you real quick at the bottom here. So it'll show you like this. There's like 11 different like setups here, but it's like 19.44. It just breaks up the contracts. That's how futures works. I can show you on the, like, I'll just go on Notion real quick. And you can see on, it'll say like two. Oh, that's the worst example to choose from, bro. But yeah, so it'll see hella arrows here that all counts as individual trades, but it's actually just one singular trade. Just to clarify that, just in case you guys are wondering, like, yo, they're thinking I'm a fraud or something. But yeah, so as you can see, number of contracts, average trade time, all this, you guys could like look at it. It says 81.82, but it's again because of the contract thing. It's actually a 66.67 over three trades win percentage. And yeah, so total profits, but then I lost this on that losing trade. So gross P&L. What else is there? P&L history. You guys can look at all this. Oh yeah, fees. Oh yeah, there's fees. So there it became from three. Oh no, sorry, from 7.464 thousand. It became 7.384, which is not actually not even a lot of fees at all. But just for to show you guys the actual amount that I ended up like getting. And then all this like executions and all that. So as you could see, 15 minutes for this win, 1 minute for the loss because you saw how brutal that was, and 25 minutes for the next win. But yeah, that's basically it for this video. Honestly, I just wanted to show you guys, keep you guys updated with the trades, show you guys a bit of how I execute and how I'm looking at to trade. But if you guys have any questions or any video recommendations or ideas, let me know in the comments, and I'm like pretty sure I'm gonna answer all of them like I've been doing in the past videos. But yeah, if you guys like the video, like if you want to subscribe, that'd be like good for me, obviously, bro. But yeah, So like and subscribe if you found this shit good. But I'm gonna see you guys in the next video and with more updates. Peace, boys.